at times like these, when prices crash, everyone tries to work out where we are in the Bitcoin cycle, whether the top is actually, and whether it's all over. But what exactly are Bitcoin market cycles, and what can they tell us about the recent price action? It's been pretty crazy, I know. But let's try and sit down some basic ideas what a cycle looks like. Let's take it back to basics, lay it out, examine it, where it comes from, whether it still holds up after the 16 years of Bitcoin's existence. It's been 16 years. Shit, I'm getting old. What exactly is the Bitcoin market cycle? Well, Bitcoin operated up until this point according to a relatively clockwork-esque 4-year cycle, within which each year has a clear characteristic. If we choose the lows as our starting point, that means we get a bear market year, followed by a recovery accumulation year, an early bull market year in which the Bitcoin halving happens, then 100% bull market mania crazy blow off top year. That's 2025 according to that cycle theory. After which, of course, there's an apocalyptic come to Jesus kind of crash where you start questioning your existence. We're plunged right back to the start. The wreckage of another horrific bear market appears and a new cycle starts from the bottom. And actually, that's amazing because it's easy to spend the bear market stacking up bargains and, of course, then hold through the early bull market. Then you can sell after a few years into the mania phase, all while looking out for new projects to speculate on. Sounds simple, right? But to figure out whether this is likely to continue, if we can keep having crypto on easy mode, we need to ask ourselves what actually causes the Bitcoin market cycle. So we know the cycle operates on a 4-year basis, but what drives this? Actually, the answer is not super clear cut, but the most accepted explanation is that it simply comes as a result of the magical immaculate Bitcoin halving. So roughly every 4 years, Bitcoin mining block rewards, those are reduced by 50%. As these rewards are the way that most coins enter into circulation. Yes, there's some fees paid as well, but that's all the new coins that are created through block rewards. That means a halving is the rate of new supply issued. If you assume demand keeps going up over time, supply keeps dwindling, new emissions keep dwindling, then you have an asset that keeps going up. We can divide Bitcoin's history into epochs separated by halving events. The last halving was in April 2024. Before that was 2020, 2016, and back in 2012. And yes, price action has followed a relatively similar pattern at around each of those events. But is the halving really so important? I mean, Wall Street's here, man. Games change. It's all over, buddy. Some people argue that there are other factors at play. Firstly, you could just be looking at a reflection of the orthodox business cycle, which kind of largely lines up with those 4-year cycles, give or take a little bit, with familiar kinds of market psychology ramped up to the max because crypto is such a novel speculative asset. We create our own narratives and stories within that, but it largely lines up with credit cycles, business cycles, all this kind of stuff. Or there's the fact that Bitcoin halvings always occur in US election years. And so what we're witnessing is not the effect of the halving, but the consequence of the US election cycles. Because nothing really else matters at this point. Crypto is just a big proxy of the US economy, apparently, in US stock markets, or possibly it's the combination of all of these factors together, helped along by the fact that since everyone is expecting a similar situation, they try to react to it in advance, which contributes to the continuation of it. But also, nowadays, crypto has become much more, obviously, than just Bitcoin. It's a gargantuan ecosystem of all kinds of stuff happening. But before we talk about how does the Bitcoin market cycle affect the rest of the cryptocurrency market, I want to let you guys know real quick about today's sponsor, and that is CoinStats. Guys, CoinStats is the best portfolio tracker out there to help you save your time and to manage your entire cryptocurrency portfolio all from one simple place. Now look, if you're like me, you probably got assets spread right out across just everywhere. So many different wallets, so many different blockchains, so many different exchanges. It's a mess, making it nearly impossible to track everything in one place. And if you can't track what you're holding properly, then you're probably not managing as efficiently as you should be. That's where the guys at CoinStats come in. This app does all the hard lifting for you, giving you an edge and a complete view of your entire crypto portfolio, no matter where your assets are at, in just a few seconds. You can connect up all of the popular apps, MetaMask, Phantom, Binance, Coinbase, BNB, Bitcoin, whatever, they got you covered, man. They got it all integrated. Just drop in your wallet address and you instantly get a nice breakdown of all of your profit and loss statistics. So whether you're looking at your total profits, your total cost, your unrealized profit and loss, your realized profit and loss, it saves so much time. Again, because you manage everything from one place. No more messy spreadsheets, no BS. The web site is great, okay? If you want to use the web version, totally cool. But the mobile app also really shines. If you're watching today's video, the guys over at CoinStats are giving a 50% discount to my community. So if you want to start tracking your portfolio the professional way, link down below, go check it out. Okay, back to this Bitcoin thing. So in previous cycles, a wider crypto playbook started to emerge. It goes like this: first Bitcoin pumps, then the profits flow into Ethereum. After that, we get altcoin season with big caps, mid caps, low caps, NFTs, all that bullshit pumping near the end. Things are changing a bit. Money went into Solana this cycle, not into Ethereum. We skipped right over all the quality altcoins and went straight to meme coin degeneracy. Once we run through that cycle, everything collapses and we're back to bear market conditions. But hopefully you will have cashed out something by then. Remember to take profits next time the market pumps, guys. However, a big question this cycle has been, what the heck happened to our broad altcoin season we usually see? Basically, this time around, we haven't had a big Ethereum pump. Ethereum's like a stable coin. We haven't had a kind of market-wide altcoin season where most coins have good performance. We had very brief moments of outperformance for altcoins. Everything's been contained really within certain niches, mini pumps, meme coins, AI tokens, real world assets, but at different times, and only a few certain assets within those. You need to be at the right place at the right time. You need to take profits super quickly. Believe in nothing. Take money quickly. That's it. That's something to say that if Bitcoin recovers to new highs, we can't possibly get a regularish altcoin season. At some point, as the money supply goes up. The jury's still out on that one, but a critical question is, will the Bitcoin market cycle still actually work in the future, or is it all changed now? BlackRock's here, it's over. Now, going back to the effect of the Bitcoin halving, keep in mind that we only have very limited data points because there have only been 4 halvings of Bitcoin's existence, and this entire asset class is less than 20 years old at this point. 16, getting old, man. Anyway, there are other factors at play here too. Regular market psychology, boom and bust patterns, all kinds of macro data gets brought in. But even if the halvings were the key cycle drivers so far, they should naturally begin to have much less effect in the future anyway. The first halving cut new issuance of coins from 50 to 25 BTC. By the 2024 halving, we cut from 6.25 BTC to 3.125 BTC, and with 95% of total supply now already having been mined, the halving just isn't as impactful anymore. Too much demand, not enough supply for miners, just, not that big of a deal. Market's too big now. Coupled with that, Bitcoin is simply a much bigger asset. It hit $2 trillion market cap earlier this year, and a big chunk of supply right now held by Wall Street ETFs. So again, you're not going to get that 2012 style wild cyclical volatility carrying on forever. Also, we have the whole of crypto expanding, breaking up into separate sectors, some of which are doing really well. Real world assets. Very cool sector, going to bring trillions on chain over time. So we aren't necessarily going to see the straightforward Bitcoin to ETH to alts rotation that we've seen in the last couple cycles. We might still, but it's more complicated this time. That all said, it's more likely that the cycles gradually fade rather than just break down overnight, become more correlated to the stock markets as more ETF products get launched, and the fate of crypto risk on, risk off tracks even closer to what stock investors do. But where are we in the Bitcoin market cycle right now? Well, we just had a huge dip, you probably noticed, but zoom out and it's really not such an insane correction. In fact, even in the current cycle, last year saw dips pretty similar to what's happening right now. And going back to the 2021 bull run, there were several such big drawdowns. 2017, I think, had like 7 or 8 different about 30% corrections. Each was then followed by a further leg up. That means that right now should, in theory, be a dip before another move up. Sentiment and RSI and all that kind of stuff would suggest that. Now, if the cycle has ended like 2011, 2015, then the top could be already in. But unless macro really does go to shit, which it could with tariff fears and all that kind of stuff. But if it doesn't, then probably just a pretty standard market cycle for Bitcoin, standard correction. Okay, but the older Bitcoin gets, the less likely it performs as it did way back in the earliest days. Another possibility too is we could just get a choppy, lengthened cycle, pushing all the way into like 2026 or some shit, man. Crazy stuff. Right now, then, the cycles are still at least a valuable starting point and guidepost, if not a history repeats, but perhaps a bit of rhyming going on here. But more and more we're seeing other factors come in that do have an important indication for what crypto is doing. We have to watch stock markets. We have to watch the money supply. We have to watch the credit cycles. We have to watch the business cycles. All this kind of stuff. It's exhausting, but it is what it is right now, guys. So you have to pay attention to the big picture for Bitcoin. But so far, we seem to be on track for a regularish kind of 4-year cycle. Let's see how we play out for the rest of the year. Thanks for watching.